What if your bank vanished overnight and your entire life savings with it? In 2025, FinTech isn't just changing how we invest, it's redefining who holds your money. But behind the shiny apps and AI-powered tools lies a silent war that could decide the future of your financial freedom or trap you forever. In 2025, the world of finance is being rewritten, not by Wall Street, but by algorithms, decentralized platforms, and digital wallets. FinTech has made investing faster, smarter, and more accessible than ever. From robo-advisors to blockchain-based trading, it's a revolution millions are joining. But beneath the surface lies a growing unease, questions about privacy, regulation, and who truly controls this new financial order. As traditional banks lose ground and tech giants gain power, are we witnessing financial liberation or the start of something far more dangerous? This is the story of FinTech in 2025 and how it might change your money forever. To understand where we're heading, we need to look back. For centuries, banks were the gatekeepers of wealth. You saved, they stored. You invested, they mediated. Brick by brick, vault by vault, the global financial system was built around these institutions. But everything changed after the 2008 financial crisis. Trust was shattered. People saw billion-dollar bailouts while millions lost their homes. That moment planted a seed. A desire for an alternative. In 2009, Bitcoin emerged. At first, it was a fringe idea, digital currency with no central authority. But it represented something deeper, financial independence. Over the next decade, cryptocurrencies and blockchain technologies gained momentum, quietly building a foundation for a new financial era. Then came the apps, Robinhood, Revolut, Cash App, making investing feel as easy as scrolling through Instagram. No suits, no fees, no intimidating offices, just tap, swipe, trade. By 2020, during the COVID-19 pandemic, FinTech exploded. Lockdown and uncertain, people turned to online investing and digital banking in record numbers. The GameStop saga revealed just how powerful this new wave could be. Retail investors beating hedge funds at their own game. Fast forward to 2025, FinTech is no longer an alternative, it is the system. Traditional banks are struggling to keep up. Young investors are skipping savings accounts altogether and diving into fractional shares, crypto staking, and AI-powered robo-advisors. You can now open an investment portfolio from your phone, trade 24/7, and move assets across borders in seconds. But with this freedom comes new risks. In Nigeria, entire populations rely on mobile wallets like Paga and Opay. But when network outages hit, transactions freeze and daily life grinds to a halt. In India, apps like Paytm dominate, but questions about data privacy and corporate control linger. And in the US, millions flock to platforms like Robinhood or Coinbase without understanding the risks of unregulated markets or algorithmic manipulation. This isn't just about convenience anymore, it's about power. The power to move markets, reshape economies, and redefine who gets to participate in wealth creation. But as that power shifts from traditional banks to tech companies and decentralized platforms, it begs the question, who's really in control now? And are we ready for what comes next? At first glance, FinTech feels like a miracle. Instant loans, zero-fee trading, AI that manages your money while you sleep. For millions, it's opened doors that banks kept locked for decades. A farmer in Kenya can access credit through a mobile app. A teenager in California can invest in Tesla with just $5.00. Financial freedom, they say, is now in your pocket. But what if that pocket is leaking? In 2023, over 70% of Gen Z investors in the US said they trusted FinTech platforms more than traditional banks. Yet many of these platforms aren't banks, they're tech companies. They don't have the same regulations. They don't guarantee your money, and when they fail, it's brutal. Remember FTX? Once a shining star in crypto trading, it collapsed almost overnight, wiping out $8 billion, 0 cents of customer funds, no FDIC insurance, no safety net, just empty promises. Even the most popular apps aren't immune. Robinhood has faced repeated lawsuits for outages during high-volume trading days, locking users out at critical moments. For a 24-year-old investor named Alex, that meant losing his entire life savings during the 2021 GameStop frenzy. He was in, the app froze, the stock dropped, his money vanished. But the risks go deeper than financial loss. FinTech runs on data, your data. Every transaction, every purchase, every swipe paints a picture of your financial behavior. Companies package this data, analyze it, and sometimes sell it. What you spend, how often you trade, how impulsive you are, it's all tracked. It's not just about helping you save, it's about predicting your behavior and profiting from it. And what about the algorithms? Many people rely on robo-advisors, automated AI systems to manage their investments. But who writes the code? Who decides the risk level? In 2024, an Australian firm's algorithm failed to account for a sudden geopolitical shock, wiping out a third of clients' retirement funds in a single week. No human stepped in. No one adjusted course, just cold, unblinking code. We're told that FinTech democratizes finance, but for many, it replaces one form of control with another, less visible, less accountable, and far harder to fight against. The convenience is seductive, but are we trading away something far more valuable, our financial autonomy, for speed and simplicity? In late 2024, a chilling event sent shockwaves across the globe. In South Korea, Toss Bank, one of the most widely used fintech platforms with over 30 million users, experienced a catastrophic data breach. Hackers didn't just steal usernames and passwords, they accessed transaction histories, biometric data, loan applications, and even real-time GPS locations tied to financial behavior. Overnight, entire lives were exposed. Victims reported unauthorized withdrawals, blackmail attempts, and identity theft on a terrifying scale. But the real fear wasn't just about the money. It was about trust. People had handed over their entire financial lives to platforms promising security, innovation, and freedom. What they got in return was silence. Toss Bank's parent company initially downplayed the breach. Regulators scrambled to respond. But their jurisdiction over tech-based financial services was murky at best. And then came the realization there were no clear laws in place to protect the victims. No compensation, no legal safety net, just code, data, and damage. Meanwhile, in the US, a different kind of disaster was brewing. Popular fintech startup named GreenGrid promised AI-driven, climate-friendly investments. Millions of socially conscious investors signed up, but by Q1 2025, an investigation revealed that 60% of the portfolios were tied to fossil fuel subsidiaries hidden behind shell corporations. GreenGrid had gamified trust. Their marketing looked ethical. Their dashboard told users they were saving the planet. But the reality? It was the same old exploitation, just wrapped in modern UX. Investors weren't just betrayed financially, they were morally deceived. And across Europe, protests erupted after several digital-only banks like N26 and Monzo began quietly using AI scoring systems to determine credit eligibility not based on income or payment history, but on obscure behavioral data, how long you hesitate before clicking accept, how often you check your balance, even the tone of your messages to customer service. In one heartbreaking case, a single mother in Berlin was denied a loan for a life-saving surgery, not because she had bad credit, but because the algorithm flagged her as financially anxious. We have reached a tipping point. The dream of financial empowerment through technology has collided with the reality of exploitation, manipulation, and massive systemic vulnerability. The question is no longer what fintech can do, it's what happens when it all goes wrong and no one is there to catch you. Fintech promised us freedom from bureaucracy, from barriers, from the old rules. But in chasing that dream, we've stepped into a world where speed often outruns safety and innovation outpaces accountability. The tools that once empowered us now quietly shape our choices, our risks, even our identities. As lines blur between finance and technology, we must ask, are we building a better system or just a shinier version of the same one? Because the future of money isn't just digital, it's deeply human. And unless we demand transparency, ethics, and protection, we risk losing control of more than just our wallets. If this story made you rethink how you manage your money, hit like, share your thoughts in the comments, and subscribe for more deep dives into the future we're all walking into. Do you trust fintech with your financial life, or are we moving too fast into the unknown? Let us know below.